Hey there, investors. It's time to take a look at another of the electric utilities, this time in the central U.S. We looked at 14 companies, only 2 made the list. Come on, let's go swimming with the sharks and see who's right for you. If you haven't already, please subscribe, hit that like button, and share with your friends. Investors, we are diving right in to the electric utility central with MGE Energy, ticker MGEE. Their dividend yield is 2.1% as of the 15th of March on a per share basis of 64.49. Now, before we get too excited about the fact that they made our list, that 2.1% is below the Dow Jones Industrial average yield, which is about 2.6, and well below the electric utility average yield, which is in the 3.4% range. However, they are a Div 0, so 17 years of increasing dividends per share. However, they did not make the list on cash flow or earnings per share. Here's what this looks like on the long-term trend. Relatively upward trends, but that slope is nothing to get excited about on any of those lines. And here's what it looks like on the year-to-year change. Next, we're over at WEC Energy Group. That used to be Wisconsin Energy. They are yielding 3.1%, so that is above the Dow Jones Industrial average yield that I use for a benchmark, but it is a little bit under the electric utility yield of 3.4. Still not bad. And that's based on a price per share of 76.25 as of 15 March. Now, just like MGEE, they are a Div 0, so 17 years of increasing dividends per share, and they are not qualified on cash flow or earnings per share. Their long-term trend, again, nice smooth upward slope, except for right here in 2015, and the dividend yield is still a nice upward slope. And here's the year-to-year changes. All right, well, let's look at these two companies side by side. Here we are. We see the two companies side by side. Div yield, MG at 2.1, WEC at 3.1. Both companies failed on cash flow or earnings, but they made our list as Div 0s. And here you see MGE and WEC on the chart. When we look closer, we see the dividend per share, and we're going to start there because this is a income kind of play here. So dividends per share, we see that MGE started out over WEC, but then in 2011 WEC took the lead, and WEC Energy, WEC Energy, has outperformed MGE ever since with a much nicer slope to their dividend share. The story isn't complete without the rest of it, so let's go take a look at their earnings per share. Again, WEC is outperforming MGE ever since, in this case, 2008. Remember, 2011 is when WEC started outperforming on dividends per share. And you can see both companies took a hit here in 15. And here was the cash flow per share. So WEC took a hit in 2015 on their cash flow per share. MG not as bad, but still a little bit. But across the full 17-year spectrum, we see that WEC is outperforming MGE. So let's get on back down to these dividends, because that's what we're talking about, an income stock here. And we can clearly see that WEC is outperforming MGE. They were outperforming on cash flow per share, earnings per share, and dividends per share. So it looks to me like WEC is the right play here. I'd love to hear what you all have to say about that, so please post your comments down in the comments section. Let me know if you have any additional information on these two companies and what your thoughts are on investing on them for part of your income portfolio. If you all like what we're doing here, please make sure to subscribe, hit that like button and that bell so you don't miss a single episode, and please share with your friends so they can get in on the conversation as well. Have a great week, everybody.